Hey guys, welcome to another MGI investing tutorial. This is Barrett, and today we're going to be looking at ticker WKHS, also known as Workhorse. Thanks for being here today, and all I ask is that if you find any of this information to be useful, be sure to like the video and leave a comment on what other stocks you want me to cover in the future. These are my opinions in the end, and this video is for educational advice only. Before making any trade, you should have a goal for entry and exit, and perform your own due diligence. So with that being said, let's go ahead and jump into the video. Background on the stock, anyone familiar with this company would know that Workhorse first went public through an IPO on August 13, 2018, with a share price of around $1.15. Now it trades almost 7 times above this valuation. So in this video, I'll be covering what fundamentally sets Workhorse apart from just any normal EV company, or if they simply don't have a competitive edge over their competition. I will also be looking at some popular investors' activity around this stock, and at the end, I will be giving my own take on what Workhorse is worth. So today we saw Workhorse down currently around 1.65%, right around $8.32 a share. This is a stock that 3 months ago reached $43. So first, to break down Workhorse, we have to understand what this company stands for and hopes to achieve. Workhorse states that it is a technology company focused on the last mile delivery sector. They create vehicles, trucks, and aircrafts, and develop cloud-based real-time telematics, performance monitoring systems that allow fleets to maximize energy and route efficiency. A possible competitive advantage, it seems Workhorse is keen on selling an all-in-one solution of providing companies an all-electric fleet that can be adapted and applied relatively seamlessly into a delivery service such as UPS, USPS, or FedEx. This solution starts with their C-Series vehicles, where they offer 2 vehicles, their C650 and their C1000, with the difference being just the capacity of the vehicles. Besides being a fully battery electric vehicle, or a BEV for short, they have standard ranges and relatively normal features of their competitors in the industry. Now included in Workhorse's all-in-one solution is their second offering of the product Horsefly. This is a drone that allows delivery without the carrier having to leave the vehicle. In their investor presentation, Workhorse states that the Horsefly reduces last mile costs by 95%. This autonomous system of creating a jumping point for the drone to leave from the center of the van seems to only be included in the higher end C1000 vehicle though. And the last part is their app called Metron, which is marketed towards delivery companies looking to maximize fleet efficiency and manage and view fleet routes and even some more peculiar stats such as maintenance levels and fuel cost, individualized from vehicle to vehicle. As it stands right now, I would say their competitive advantage is limited in the space of the actual products themselves. I do see it being more of the all-in-one solution and the ease of combining all the products and allowing the carriers to maximize efficiency and start gathering their own telematics and optimizing routes. During Workhorse's latest quarterly earnings, they produced 38 C-Series vehicles and delivered 6 vehicles. They also left us with some guidance for 2021 of producing 1,000 vehicles. Considering we're almost halfway through 2021, this would involve some serious production increases, but this is what Workhorse has been saying they were going to be doing for some time. Now, a possible risk factor is they don't capitalize on this first mover advantage and don't keep innovating on their all-in-one solution. Now, a prominent growth and tech investor, Cathie Wood, recently sold off around 4.5 million shares at a loss. She bought around $12.30 and sold at an average price of around $9 a share. And now we're currently sitting about that $8.35 level. So what do I think the company is worth? I think this company has a lot to prove with how well they can market this solution to carrier services. As it stands right now, the reason USPS didn't go with Workhorse was because of the high price of the solution it would cost them to replace the 165,000 vehicles they are wanting to update. Workhorse is one of the only US-based companies in the last mile delivery service in the US, so this could prove to be one catalyst or competitive advantage for them going forward, but their processes are not well differentiated enough where someone else couldn't just come along and copy exactly what they're doing. Overall, I think the company is still richly valued. They are projecting 1,000 vehicles produced in 2021, down from their fourth quarter prediction of 1,800. I think over the next several years, we could see this being a 2 times or even 3 times potential stock, but that does come with them hitting the numbers on producing 1,000 vehicles for 2021 and subsequently increasing that amount of produced vehicles year over year. Well, I hope you guys can see that Workhorse in the current state looks to be a very speculative but possible profitable play with a buy and hold over the long term. Thank you guys so much for watching, and I'll see you in the next video.